This PMS from Green Portfolio looks like a superstar. High returns, lower drawdowns, and alpha in most years. But when I dug deeper into our analytics, something didn't add up. First, let's walk through their strategy and understand what they're actually doing. So, it's a PMS fund. What they are focusing on is this strategy called growth at a reasonable price strategy, with utmost importance on corporate governance, growth prospects, industry dynamics, and so on and so forth, especially if you look at the key company fundamentals and valuations. The main question here is, why is this fund being compared to a broad market benchmark like S&P 500, right? So you can see that it has massively outperformed the BSE 500. This is a growth at a reasonable price strategy is what they are calling, right? So should this be compared against S&P 500? Is it even a proper benchmark to compare something of this strategy to a broad market benchmark? We will discuss more on that now. So I've loaded up the Green Portfolio benchmark, Green Portfolio fund here. The benchmark that we are suggesting is the MSCI India Small Cap Value. This completely makes sense when you look at the objective of the fund as well as the market capitalization they have shown in their website, which is again the fact sheet, right? So growth at a reasonable price itself means the reasonable price itself tells you that it's kind of like a value focused, or they are trying to buy growth companies at a cheaper valuation, right? But more importantly, if you look at the market cap allocation here, almost 75 to 80% of the allocation goes to small and mid cap companies. So it's perfectly reasonable to pick a small cap value benchmark to compare this fund, this PMS fund against. Let's first analyze how this fund has done, not with what the fund manager has chosen, but with a proper benchmark. So when you compare this fund, the Green Portfolio Special Fund PMS, with MSCI India Small Cap Value Fund, the story or the outperformance still doesn't change by a lot, right? So it has still massively outperformed. You can see it in the performance chart. And also, when you look at the excess returns, right? So since the inception of this fund, which is about 7 years, 7 to 8 years back, it has generated an excess return of about 180%, which is a lot. And when you look at the annual returns, again 24% per annum compared to 15.5, which is the benchmark that you have, the MSCI India Small Cap Value. So out of 8 years, it has outperformed in 6 years, excluding 2023 and the recent year, which is the 2025, the year that we are in. The impressive thing that caught my eye about when I'm analyzing this fund is the maximum drawdown, which is 24% compared to the small cap value, which is about almost twice it, right? So something to note here, something to give credit for is like the maximum drawdown here, right? It's much lower, right? Which is something to note and something that you should give credit where it's due. Second, I want to analyze what this fund manager has been doing since the inception of this fund. One of the great things about phenomenal as well as the factor exposure analysis is you can pretty much decipher any strategy by just 9 variables, right? Like 4 asset class variables and 5 factor, the equity factor variables, right? So when you are looking into the exposure analysis, you will completely understand where the exposures or what the fund manager has been doing since the inception of the fund. So one thing that is that can be seen here is the consistent small cap exposure, right? The size exposure. So this tells you that this fund has high small cap to mid cap companies. And you can also see a negative value and a sort of negative low vol exposure as well. When you look at just the risk sources, again, you can see a lot of the risks comes from the size factor, which is the small and mid cap factor. So even before looking at the market cap allocation of the fund from its fact sheet, you can quickly decipher what the fund manager is doing using the factor exposure analysis. And since the inception, that is, last 7 to 8 years, the story stays the same, right? So you have a high size exposure. You definitely have a broad market, that is the Nifty 50 equity exposure, and a negative value exposure since the inception of this fund. As I mentioned at the start, that this fund has generated alpha in most of the years, right? So you can see when you're just looking at the unexplained returns, right? So in 2021, 2023, and 2024, you can't explain the returns, where the returns are coming from. So out of 5 years, the alpha has been consistent for this fund when you compare it to the basic the equity factors and the asset class factors that I showed you in the previous tab. One thing, again, going back to the drawdowns, which kind of caught my eye, something that that for an equity strategy, having a drawdown, especially for a small cap, having a drawdown of 23% is quite impressive, right? So you can see a lot of the drawdowns here in 2022. You can see even during COVID here, COVID here, right? So this is something to look at the fund, for what the fund manager has done since the inception of the fund to protect during drawdowns. Finally, I want to discuss about the fund. No, we have compared this fund against its proper benchmark, right? But still, we haven't the outperformance hasn't changed. So this is where the your perspective kind of changes when you kind of reframe the time period. So what I did was I kind of compared this fund with a lot of small cap benchmarks. So what I took was the small cap 250 index, the small cap value, which we already saw, the small cap growth index, and as well as a broad market Nifty 500, which is kind of the benchmark they have chosen in on their fact sheet. So what you're seeing is pretty interesting here, because in the previous chart, the previous performance chart, you saw massive outperformance, and here the outperformance almost is it's like gone away, right? It's not even there. But still, no, compared to other benchmark, it is still outperformed by a small, tiny amount. But you can see the other benchmarks are also acting the same way as this Green Portfolio PMS. So what's the magic here? The magic is the time period. So here, the benchmark and the portfolio is starting from July 2018. But here, we are starting it from September 30, 2019. The reason being is one of the small cap fund here, the Motilal Nifty small cap, starts from 2019, right? So by sheer coincidence, when I just compared this fund, all the outperformance sort of went away. So kind of most of the outperformance or most of the returns, you can say that came from the first year or so, right? And post that, it has been behaving sort of like a simple small cap index, right? The reason I'm comparing these things with the benchmark, the small cap benchmark, is the expense ratio and the fees that you're going to pay eventually, right? Which will completely eat up into your returns as well, right? So when you look at the statistics here, so for a small cap fund, you're paying about a 0.33. And since these are benchmarks, we don't have the expense ratio here, right? For a Nifty 500, which is again another interesting thing that I didn't point out, is when you compare it with a benchmark that is not suitable to your strategy, all your strategy will look superior when you have an inferior benchmark. So that is something that you note that can be seen here, right? That when you're comparing your fund with Nifty 500, it sort of looks much better. The strategy itself looks much better than what it's supposed to look when you compare it with a proper benchmark. And finally, I will also touch up on the factor exposure analysis just to convince you that all this fund and also the benchmark kind of has the same factor exposure analysis. So you can see that the equity exposure, that is to Nifty 50, the betas are quite the same. But what is more impressive is the size exposure. All the small cap indices, the benchmarks that are chosen, are close or almost the same to the Green Portfolio Special Fund. Not so much for the Nifty 500. Again, that's one of the reasons why I think picking the right benchmark will completely change your perspective about a fund or a portfolio, right? So you can see it's quite low here, right? It's very low when it comes to the size factor, and you can also see the other factors which are a bit tiny. You can also see like the value factor, right? It's quite negative here. So that is about this fund. What we have seen in this video is a PMS which has done tremendously well since its inception, right? Even when you compare it with the benchmark, with the right benchmark that we have chosen, which is the small cap value index, right? So since 2018 till now, it has done well. It has generated an excess return of about 180%, right? But when you compare this fund against a small cap benchmark from 2019, almost all the outperformance goes away. And this sort of tells you two things, right? The main takeaway for me and what I hope you take away from this video are these two things, right? One is how important benchmarking is to your portfolio, or when you're analyzing a fund. Benchmarking completely will change your perspective, because when you're benchmarking against the right benchmark, you'll start thinking that instead of paying, PMS definitely costs a lot of money, right? You're going to pay north of 2%, 3% in terms of fees, right? And there will also be a lot of minimum investment amounts. So instead of doing that, why not buy a benchmark that is tracking this index, which mostly anywhere between 0.1% to 0.4% in terms of expense ratio, which is on the lower end, and you don't have minimum investment at all, right? So that should be one takeaway, how benchmarking should be the core, the fundamental analysis before you even look at the returns, right? Benchmarking is the most important thing before you even start any sort of analysis. Second is sort of the time period itself, right? What sort of time period are you looking at, right? Sometimes a fund or a portfolio might look really well, but it might have done well in probably a few months or a few, not even a few years, a year or so, right? That will boost the entire portfolio return. And when you see it since the inception, it might look magnanimous, right? So sort of the time period, the time frame also will change your perspective on how you look at the fund. But overall, right, this fund has done well since its inception compared to its benchmark. It has lower drawdowns, right? But something to be aware of is, since 2019, it is almost tracking the benchmarks, which you can buy it in a much cheaper way, right? 0.3%, 0.2%. That's about it for this video. Thanks a lot for watching. And if you want to analyze any PMS funds or any portfolios or mutual funds in India, please do check out phenomenal.com. We are best in providing analytics, and more importantly, the level of transparency in our software is impeccable compared to any other software, not only in India but globally. So if you're a mutual fund distributor or a financial advisor or any professional investors like pension fund managers or portfolio managers, come to phenomenal.com. I would be happy to give you a demo. Thanks a lot for watching. I'll see you next time.